Good morning. Here is today's Korean economic news briefing. South Korea is bracing for the significant economic fallout from the escalating Middle East crisis, with the government announcing a comprehensive package of measures to stabilize livelihoods and industry. Vice Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, chaired an emergency economic ministerial meeting today, emphasizing the mobilization of all available policy tools, including a supplementary budget, to minimize the impact on the economy and public life. This proactive stance comes as Dubai crude oil prices recently hit $105 per barrel, pushing global energy markets into high volatility. In response, the government plans to implement a highest price ceiling system for petroleum products this week, alongside measures to prohibit hoarding. Additionally, the existing linked subsidies for diesel will be extended until April, and fuel tax cuts are under active consideration. These steps are crucial to mitigate the rising cost burden on logistics, transportation, and energy-intensive industries, which are already grappling with uncertainties stemming from the U.S.-Iran tensions and the potential blockade of the Strait of Hormuz. The urgency of these measures is underscored by grim economic forecasts. Experts warn that a sustained $20 per barrel increase in international oil prices could shave 0.45 percentage points off Korea's GDP growth rate and push consumer price inflation up by as much as 1.1 percentage points. This scenario raises serious concerns about stagflation, a phenomenon where inflation rises amid economic stagnation. China, for instance, is already experiencing its highest inflation in 3 years, partly due to raw material shortages caused by the Hormuz Strait situation, providing a stark example of what Korea hopes to avoid. Regarding the supplementary budget, Vice Prime Minister Koo specified that it would be managed without issuing additional government bonds, a move made possible by an unexpected surplus in tax revenues, estimated between 6 to 10 trillion won, driven by the booming semiconductor industry and a vibrant stock market. This approach aims to bolster economic support without further straining fiscal soundness, which has been a point of contention. Critics have urged the government to focus supplementary spending on vulnerable groups and affected businesses, warning against its use for election-related purposes, especially given the current administration's active fiscal stance, which already projects a managed fiscal deficit of 3.9% of GDP this year, exceeding the usual 3% benchmark for fiscal health. In broader macroeconomic trends, Korea faces a challenge in achieving its potential growth rate. Last year, Korea's GDP growth of 1.0% lagged significantly behind Taiwan's 8.7% and even Japan's 1.2%, the first time Japan has surpassed Korea since the 1998 Asian financial crisis. This highlights the need for structural reforms to break free from the $30,000 national income trap, with a strong focus on strategic industries like semiconductors, much like Taiwan's economic engine. Turning to financial markets, a notable money move is underway, with funds shifting from bank deposits to the stock market. Commercial banks are responding by slightly increasing deposit rates, with some offering up to 2.95% and savings banks averaging 3.09%, in an effort to retain liquidity. The Kospi index closed up over 1% today, marking its second consecutive day of gains, while the KOSDAQ saw a slight dip. However, concerns about market integrity persist, with reports indicating that the KOSDAQ recorded 8 times more unfair trading incidents than the Kospi last year, with 60% involving the use of undisclosed information, particularly in AI and secondary battery sectors. The Korea Exchange is stepping up its analytical capabilities to counter such activities. In the bond market, the yield on 3-year Treasury bonds recently surged to 3.42%, its highest level in nearly 2 years, indicating tighter borrowing conditions. Despite this, foreign investors continue to show confidence in Korean debt, with their holdings of Korean bonds surpassing 350 trillion won last month, a new record. The Bank of Korea, meanwhile, maintained its benchmark interest rate at 2.50% in February, unanimously, while upgrading its 2026 GDP growth forecast from 1.8% to 2.0%, signaling a cautious optimism about the domestic economy. Globally, the U.S. Federal Reserve is expected to keep interest rates steady at its June FOMC meeting, with market sentiment leaning towards only 1 to 2 rate cuts for the entire year, a cautious approach given the current economic climate. Shifting to industry and science, the future-oriented sectors are buzzing with activity. The government has unveiled a plan to integrate and manage 513 strategic technologies across 19 key areas, including semiconductors, AI, displays, and batteries, under a one-team approach, aiming to secure national technological competitiveness. The Inter-Battery 2026 FEED conference in Seoul is showcasing the next generation of K-battery technology. LG Energy Solutions CTO, Kim Jae-young, highlighted ongoing electric vehicle testing for sodium-ion batteries and pilot production for all solid-state batteries, signaling significant advancements. Amid a slowdown in EV demand, dubbed the chasm winter, Korean battery makers are actively seeking new growth engines beyond electric vehicles. Energy storage systems, and uninterruptible power supplies, UPS, driven by the surging demand from AI data centers, along with robotics, drones, and urban air mobility, UAM, are emerging as crucial new markets for battery innovation. Artificial intelligence continues to be a central theme across the economy. The government has launched the K-Moonshot Project, a national initiative leveraging AI to double research productivity by 2030 and tackle 12 major national challenges in fields like advanced bio, future energy, and physical AI by 2035. A total of 161 companies have partnered for this ambitious undertaking. In a sign of AI's transformative power, Oracle reported surprise earnings, largely driven by explosive demand for its cloud infrastructure services from AI clients. Seoul City is also playing its part, launching a regulatory innovation free pass to identify and remove 100 regulations in 8 new industrial areas, including autonomous robots and AI medical services, to accelerate the commercialization of innovative technologies. However, there are discussions on the labor market front, with some economists cautioning that pro-labor policies combined with AI adoption could potentially lead to prolonged low growth, as AI's impact on employment and wages reshapes traditional economic models. Doosan, for its part, is investing in physical AI startups, signaling a broader industrial embrace of advanced AI applications. In the real estate sector, the outlook remains challenging. The apartment pre-sale index for March saw a slight decline nationwide, attributed to the end of the capital gains tax deferral for multi-homeowners, which is expected to increase housing supply, and a prevailing wait-and-see attitude among buyers. The average first-tier subscription rate for private apartments in February hit a 23-month low at 3-to-1, marking the third consecutive month of decline. Seoul Mayor Oh Se-hoon has criticized the current administration's real estate policies, attributing them to a Jaeon's crisis, citing a 33.5% drop in Seoul's Jaeon's listings and a 5.5% price hike over the last year. Adding to market instability, the Housing and Urban Guarantee Corporation, HUG, revealed that it has initiated forced auctions on the properties of 30 foreign landlords who failed to return Jaeon's deposits, a result of HUG's one strikeout system for egregious cases. Internationally, the U.S. continues to navigate complex trade and monetary policy. Beyond the Fed's interest rate decisions, the U.S. Supreme Court's recent ruling that former President Trump's broad tariffs, imposed under the International Emergency Economic Powers Act, were unconstitutional has significant implications. Following this, Nintendo America has filed a lawsuit seeking hundreds of millions of dollars in tariff refunds from the U.S. government, highlighting the ongoing legal and economic reverberations of past trade policies. For investors and general viewers, the immediate future for the Korean economy is shaped by two major forces: the external shock of the Middle East crisis and the internal dynamism of technological innovation, particularly in AI and advanced batteries. While rising oil prices and geopolitical tensions present significant headwinds, prompting extensive government intervention, strategic investments in future technologies and robust fiscal management offer potential buffers. Investors should closely monitor commodity prices, government policy responses, and the performance of key strategic sectors for opportunities, while general viewers should prepare for potential inflationary pressures and shifts in the labor market as AI integration accelerates. That concludes today's economic news briefing. Thank you for joining us.